Well, good morning, everyone. This conference session, Investors Outlook on Future Space Economy Applications, is also being filmed as the first episode of Avaya Satellite Magazine's Future Space Economy webcast, an interactive webcast series designed to educate business leaders, policymakers, investors, and innovators about the economic potential of new space applications. Now in its third season, Future Space Economy is sponsored by MDA Space, a pioneer in robotics, satellite systems, and geointelligence solutions. MDA Space has been a strong supporter of future space economy in the past, and we are grateful to be joined by MDA Space CEO Mike Greenley for the discussion. Thank you, Mike, for the sponsorship. Sure. We'll have our group discussion and Q&A here today, and then via satellite rebroadcast the panel discussion next month for the first Future Space Economy webcast episode of Season 3. Avaya Satellite will announce the date of that rebroadcast next week, so stay tuned. So my name is Dara Panahi. I'm a partner at Milbank, a global law firm, and lead its Space Business Group and Global Risk and National Security practice. We're very proud that the firm's practices remain and maintain a top ranking in those areas, advising on projects spanning from subsea cable, terrestrial fixed and wireless, digital infrastructure and its components, transportation, high altitude, space, near space, and beyond, in all corporate, transactional, M&A, strategic finance, restructuring, regulatory, and national security disciplines. I'd like to very briefly introduce the topic, and then our distinguished speakers for our Investors Outlook panel, and then kick off a thematic discussion. So the latest data we have in terms of full-year performance for the space economy are from 2023, where the global space economy generated revenues of approximately $400 billion. The commercial industry segment of that contributed about $285 million of that figure, or 71%, with government space budgets, human spaceflight, and other civil applications tallying up to roughly $114 billion. In 2024 private investment activity, I am not Nostradamus, I can't tell you about 2025 yet, but 2024 private investment activity continued to rebound significantly from the dips in 2023, with over 600 investment transactions, about a 50% year-on-year increase, totaling approximately $8.6 billion, which is 25% increase year-on-year 24 to 23. Notably, there's a consistent trend of increased investment in beyond Earth applications, as well as funding for European companies. There's also an emerging trend of a flip-flop between the US and China, alternating as primary markets for investments, with the US still retaining that top position. And then a number of publicly listed companies, including MDA, Redwire, Rocket Lab, AST SpaceMobile, have demonstrated strong and resilient performance over the past year and a half. So let's unpack and elaborate this topic. We're very fortunate to have Megan Crawford, directly next to me, co-founder and managing partner of Space Fund, leading space venture capital firm with a portfolio of 21 startup space companies across 2 funds. Megan is also a twice exited founder. She's a business educator. She's an industry pioneer, experienced executive, and investor. Next to Megan, we have Dave Diaz. He's with the Economic Development Office for Loudoun County, Virginia, but also actually acts in that role for all of Northern Virginia. He leads the region's efforts to get attention and expand both in the US and internationally, sort of as a hub and target for space companies. In his prior role, he earned a Bronze Star for his service in Operation Iraqi Freedom, where he served as an intelligence officer. Next to Dave, we have Mike, already somewhat introduced, but I'll elaborate a little more. He's the CEO of MDA Space. He joined the company in 2018, took it public a couple of years after, and he has steered the company through a period of growth and expansion, now doubling its revenue. He has many recognitions, including winning the Satellite Executive of the Year at Satellite 2024, as well as being recognized as an Ottawa top 40 under 40 business leader, and also a recipient of Queen Elizabeth II's Diamond Jubilee Medal for service to peers and the country in the defense sector. And this is just a few of the accolades. I just had to keep it short. And next to Mike, we have Raphael Roentgen, who's the founder and general partner of Earth to Mars Capital, a space-focused early-stage venture capital firm. He's also the co-founder of Prometheus Life Technologies, which is a space biotech company. He lectures on space entrepreneurship and investment in several universities, including the International Space University and the Swiss Federal Institute of Technology at Lausanne. He also hosts a popular space business podcast. I've listened to it. It's actually very, very good. And is the author to Infinity, an introductory book on the space economy. Let's jump right in. Theme number 1. A key challenge for the commercial space actors and the economy generally has been this perceived esoteric, specialized nature of the business, its applications, its asset classes. As the industry continues to grow, and I like to keep using this term, democratize in terms of barriers to entry lowering, what are the opportunities and what are the challenges in educating and attracting a broader class of diversified investors? Dave, you've been spending a few days running around the conference. Would love to hear your perspective since you're someone newer member to this ecosystem.
Yeah, sure. I mean, I think that, in any sector, we see this challenge. We have a lot of entrepreneurs to larger companies approach us about those kinds of issues. I think one thing that I would bring from my perspective in economic development is how underutilized economic development groups are, both in the investor community and with founders and CEOs. Those economic development groups are on the ground long-term, really understand the ecosystem, and have resources and assets to offer. From research teams that can help entrepreneurs to really find investors. Again, even medium to large companies have a hard time finding the right investor that really matches what they want to do. So, one of the things that we're going to be announcing actually at the end of the month is a partnership with a group from Silicon Valley that's going to launch a pitch competition, which a total prize of $1 million. That's going to be something that, again, just one group is doing in this realm to really try to help companies to thrive and succeed. And that's going to be non-dilutive funding, which I think if you get some of that funding, I think really builds credibility because you've got an association with a local government entity that you can show funder groups that you're able to actually attract some kind of funding. And so, much like, countries have really raced towards space, so have local and regional and state economic development agencies. And I just don't see a lot of interaction with those kinds of companies and those groups and on the investor side to really identify those special companies. Oftentimes, economic development groups have that intelligence and have some resources to offer. So that's one of the observations I've made since I've been here.
Thank you for that. So, Rafael, I know many of the investments you've done are really get into the esoteric or future-looking elements of the economy. Opportunities and challenges in getting your investors on.
Yeah, I mean, for example, we have a company that's literally working on nuclear fusion propulsion, so that's probably about as esoteric as it gets. Having said that, esoteric, I mean, do you think AI is esoteric? I think AI, I mean, and I'm saying this, my graduate degree is literally in machine learning and AI, but I started my AI degree in 2013, and my friends, I used to be a hedge fund guy, so I tended to have smart friends, smarter than me anyway, and I told them, hey, I'm getting a degree in AI, and the consensus response was something like, that sounds intellectually interesting, but it isn't really useful for anything commercial, is it? Look where we are now with AI. And personally, I think if the AI bros are literally raising hundreds of billions of dollars for, hallucinating chatbots, I think our sector actually deserves a few billion for national security and physics, cool physics, right? But at the core of it, look, it's an educational challenge. So what happened with AI, I think the pivotal moment was probably something like ChatGPT 3.0 coming out. And people were like, wow, this is actually working. Possibly, I disagree, but it's kind of useful, right? And now we're seeing things like we're landing on the moon again, right? Congrats to Firefly, amazing. And Intuitive Machines, good luck next time, but also great effort. People see Starship launches. I think the more of these things people see, that helps, right? And I think there's so much to come in the future. I think there's going to be in-space manufacturing, people seeing useful products coming back from space and things like that. But we do need more education. And I'm very grateful that you mentioned my podcast and book and courses and everything. I'm trying to do my part there, but we need more education about this esoteric topic.
Thank you. I mean, similar questions, Megan, you've been at this for quite some time. And some of the applications obviously are a little bit more tangible, some of them are not. Part of, I think, space's challenge, at least historically, has been to get and understanding a sort of base case model. This is what it will do. That's why you should invest. What opportunities do you see? What challenges do you see?
So, as mentioned, it is an educational issue when you're going out to the investment world, trying to raise capital. So a lot of people forget that venture capitalists also have to raise capital so that we have the money to invest in the companies. And it brings me back to my days as a professor many moons ago. It is an educational problem. And it's one of the reasons that at Space Fund we publish peer-reviewed journal research. I talk to my other venture capital friends in Silicon Valley, and they're like, "You're doing what? You're publishing papers? Why?" Well, because this is such a new investment sector that people just don't understand how it affects their daily lives. And I think that's the thing that's missing, is that most investors are using space data, space information every day. They just don't realize it. Most people don't realize that something like greater than 90% of the information we have about our planet's climate comes from space. Most people don't understand that radio and television and communications and all of these things are only because we have assets on orbit. And then I like to use some examples of some of our portfolio companies, one of which is Hydrosat. They're using hyperspectral imagery to help farmers know when to water their crops, to reduce water usage in farming. Like, that's huge. And people go, "That's a space company?" I was like, well, yes, actually, they have to have satellites on orbit in order to do that. So bringing it back down to the everyday useful pieces of technology that people are familiar with, I think really helps to overcome that challenge.
Thank you, Megan. So Mike, MDA and its predecessor entities, and we won't go through all that for the audience, but it's always been a forward-leaning company, even in its past iterations. And now you're public. You have to go out on a quarterly basis, convince your shareholders that the company's focused on the right things, doing the right things, and some of the activity the company is engaged in is obviously a bit forward-looking, whether it's building satellites for D2D applications and other things. How do you go about educating the investors, and how do you go about even having your C-suite look at the right model, the right strategy going forward? How do we keep educated, and how do we get confident we're doing the right things?
Yeah, I think the biggest opportunity in the market right now is really around commercialization. That I feel like the fact that the space market is becoming increasingly commercial is creating. We have very strong anchor government opportunities behind a number of things that we do. But the acceleration of the pace of growth really comes from commercialization. I find that that's helping, tell the story to people and getting them to get connected to it. So in our example, we can have, our investments in synthetic aperture radar-based Earth observation. We have a lot of defense and intelligence customers around the world, but then our largest investment is our next commercial constellation that we would take to the market. We have large, international space station customers and gateway space station customers for our robotics. To deliver robotic systems to large agency programs, but then we invested and come to market with MDA SkyMaker as commercial robotics that's going to these new commercial space stations that will hopefully someday replace the International Space Station. And then on the satellite side, having MDA Aurora standard products as the next generation digital satellites, but the applications for those are communication networks that are feeding large commercial broadband networks worldwide, that are feeding direct-to-device networks worldwide. And so the pace of industry picking up these applications now and having commercial space stations, commercial industrial parks in the future, commercial missions to the moon, some of which were just referenced today, large commercial networks, is really helping when I'm working with investors, helping them see and get comfortable with the fact that it's kind of an industrial sector, from an investment perspective, space being a bit of industrials, but that it is becoming a strong commercial sector in its own right, as opposed to just a historical maybe government exploration little story or something like this. It's a legit thing that has sustainment. I think that recurring revenue with those commercial customers is making people even more comfortable, and that's only just beginning. So for us, we would have picked up a low Earth orbit constellation order with Globalstar 3 years ago, and then just announced another $1 billion order from Globalstar last month. But just to start to see that, where there's you're getting into commercial relationships and delivering recurring revenue, recurring order patterns with an industrial base is really helping people kind of make it feel normal to be able to participate in the space sector.
Thank you, Mike. So investors inherently have different appetites for risk, reward, investment horizons, and other criteria. In framing it generally, and this is not exhaustive, but when you look at the potential applications of future space economy, we're talking about global or regional broadband, we're talking about direct-to-device, Earth observation, space transportation, space stations, tourism, research, robotics, and eventually moon or Mars missions or applications. From your own perspectives, how would you sell, how would you focus the investment opportunity in some of these? Because we're talking about investor outlook. Some of these are more tangible, some less, but I'd love to hear each of you almost give me a pitch. If you're going to convince an investor that your capital is going to be well deployed in any of these future economy segments, how would you go about it? And let's start with Rafael.
Yeah, I would. First of all, there's different, and I used to be an investment banker and hedge fund guy, there's different investor classes with different risk appetites and profiles, right? So there's some investments which are not suitable for others, right? So, now there's been in the last few days discussions that we need more spaceports. If that's actually something that's coming, you can go to any number of infrastructure investors if they think the cash flows are going to be there and stable, right? And then you go like all the way to the spectrum to, again, I mentioned the example of the nuclear fusion propulsion company. You have some stuff that's so extreme that you almost need like wealthy people who are, we call it in the industry catalytic capital. It's like capital that's invested because people want to see something happen. And if they make a return, fine. If they don't make a return, also fine, but it's happening, right? So it's different investors for different opportunities. And then, sorry, what was your actual question again?
So pitch me on how you would raise capital for one of these specific applications, whichever, could be spaceports, whichever one you prefer.
Okay, so I mean, I'm making this up as I go on spaceports. So this may take a while, but there seems to be a bottleneck on spaceports. I mean, I think that's kind of evident, right? And the number of launches is only going to increase. And then also, by the way, from a national security redundancy point of view, I don't think it's a good idea if we have a few locations that an adversary could take out. I think it'd be good to have more locations. And then if everything works out and we get more launches, and then, by the way, somewhere probably 1 or 2 decades in the future, we may have like point-to-point flights on Earth, right, requiring even more infrastructure, almost equivalent to airports today. And airports is a huge infrastructure investment opportunity. I mean, it has been for the last few decades. So I think the same thing will happen with spaceports.
Thank you. Over to you, Megan.
So there's, in the investment world generally, as Rafael said, people have different investment priorities, different risk appetites. And so that's why you see so many different asset classes, whether this is private equity, in which venture capital sits in that bucket, private credit, real estate investing. And the thing is, space can touch all of those different asset classes. So not just spaceports themselves, but what about the real estate development around those spaceports? Spaceports tend to be in places just that are not usually very well developed. That's kind of on purpose, though, right? You don't necessarily want your spaceport in a neighborhood. But you will need infrastructure around those spaceports. That becomes a very easy investment prospect for somebody who's used to doing real estate development, right? And then when you talk about private credit, space assets are getting easier and easier to finance from a debt perspective as those assets are becoming more well understood by the private credit markets. And then for those investors who have a little bit more of a risk appetite, venture capital within that private equity bucket is probably the riskiest of those asset classes. But that's where you're also going to get the highest reward. And so, right now at Space Fund, we focus on the venture capital part, obviously. But we're also invested in a company that's standing up a private credit fund as well, because we believe that's necessary for the space economy going forward. And that also gives investors the ability to invest across these different asset classes.
Thank you, Mike. From your perspective, maybe, you've doubled essentially the business at MDA in a short period of time. Maybe your perspective of what things you are investing in, sort of as proof positive of how you see the future.
Sorry, my brain was all wired back on how to make the pitch. Can I talk to that?
You can do that too.
So for me, the pitch, because of us, like as a broad area, a broad spectrum investment opportunity in the space sector. We're not just for a particular technology, because we have a line of business in Earth observation, a line of business in robotics and space infrastructure, and a line of business in communication satellite development. We represent this broad opportunity. And so for me, it's about having people realize that space is a legitimate emerging market that is about to become persistent. Like, it's not going to go away. It's not like 1960, 1970, where we went to space, proved we'd go to the moon, and that was it. We didn't do anything for 50 years. So this is now a persistent economic opportunity. And the reason why it is because space is accessible. So the cost of launch has come down from $20,000 a kilogram to $2,000 a kilogram, on its way to $200 a kilogram in the next 5 years. And so space is increasingly becoming accessible. Once it's accessible, which it now is, it becomes commercial, and then commercial is causing the acceleration in the growth. And we're seeing that the governments, like the U.S. Department of Defense, are switching to commercial services for Earth observation and intelligence instead of owning all the assets themselves. That corporations are going to commercial services for communication. And that corporations are now investing in space infrastructure to be able to leverage space stations for the next generation of advanced manufacturing. So we'll have chemical reactions in space and material reactions in space and production in zero gravity of things like materials and pharmaceuticals, or cellular growth in space to build human spare parts that we can come back and replace our retina or our meniscus or whatever things we grow there. So we're opening up this entirely new landscape. So I liken it to the 1500s. In the 1500s, we were in Europe, and folks had solved the access problem, which was how to sail back and forth across the Atlantic Ocean, and discovered a place that was just North and South America that had all kinds of resources. And they kind of came home and said, there's North and South America, and, that sounds like a crazy thing to do. Why would we sail across the ocean and do things in North and South America? Of course, that kept going and became persistent, and the whole economies then evolved. To me, space is like a new continent. We figured out access. The cost of access continues to drop, and it provides an entirely new range of economic opportunity to provide communications to all the rural communities and a third of the world that's not on the internet or can't connect to a smartphone today, to create industrial opportunities, to create new chemicals, new materials, new pharmaceuticals, new human spare parts that we can only grow in space without gravity, to be able to bring back to Earth and generate things. It has a mining opportunity. It has an interplanetary living opportunity. And so this new continent has all these opportunities, and it is now accessible, and therefore it's becoming commercial. It took us 30 years to have the International Space Station. It's now going to go out of business and be replaced by commercial opportunities and commercial LEO destinations, and have 2 to 4 commercial space stations that now go into orbit as business enterprises. It will take less than 10 years for the moon to become commercial. It won't take 30 years. It's already having commercial missions to the moon. And so companies will go to a SpaceX and get access to the moon and go and do things. They won't even have to go through space agencies to do that. So the acceleration of this market into this new opportunity is enabled by access. It's a large opportunity, and it is commercially accessible, so it's going to have commercial acceleration. So that's, to me, the big future that's ahead of us.
Thank you. So, Dave, you're welcome to give me your pitch, but you're also welcome to orient it from the standpoint of why space is important for a community like the Northern Virginia area. And as I think Megan put it very eloquently, there's a lot of ancillaries that is needed to essentially enable it.
Yeah, and sort of taking what Mike was talking about, the continent analogy, as economic developers, we look at things geographically. And so I think that oftentimes if you're out there looking for funding, you're thinking, okay, well, certain regions of the U.S. are known for certain things in terms of innovation, or maybe other areas are known more for certain sectors of the space economy. And so I think for both investors as well as companies and founders, really make sure that you understand the region in which you're trying to operate before just trying to seek funding in that area. And so I think part of the pitch for this area is that people don't realize that Wallops has so much launch capability, and it's only a few hours from here. We did some research here, and again, I think a lot of people will associate this region maybe with NASA and government and those kinds of things. But We've got satellite manufacturers, we've got satellite data and communications, R&D, international partners, launchers, ground stations, different federal agencies. And so what does that all mean for investors and for companies and founders? It means that if you need really specialized talent in different fields that cut across the space sector, you're likely to find it in those kinds of regions that actually have multiple types of industries and sectors. You're also going to likely have more of a supply chain infrastructure as well. And so I think that's one of the things that I would argue for is that really make sure that you understand the region in which you're operating. We do a lot of work internationally in certain countries. We'll focus certain industries in certain regions very, very narrowly so that they can try to grow those areas. And it all makes sense from a big picture economic development perspective. But sometimes they get too siloed and cannibalized and really need talent from other sectors in their own industry and can't find it. So that's some of the resiliency I think this area has. And we're starting to see more sectors in the space economy start to locate in this region.
Thank you, Dave. Well, I don't think we can talk about investors' outlook without getting into the macro investment world. And in the current economic environment, albeit we did have some good news apparently this morning that on a producer basis, inflation seems to be moderating. There is this anticipation of ongoing inflation, at least staying relatively high. There's ongoing volatility in the economy globally, not just because of tariffs, but other dislocations. There's government budgetary uncertainty. There's all of these things impact investors' outlooks. From your own perspectives, is this reason for caution? Is it potential for opportunity? Is it both or something else in terms of an investor looking at opportunities in space today? And Megan, we'll start with you.
So I mentioned earlier papers, publications that we've done. This past summer, released a paper that showed that the space industry is not correlated to public markets or any other alternative asset class that we tested. So it's not correlated to gold, it's not correlated to oil, it's not correlated to real estate. From an investment perspective, this is a really important data point. We also were able to show that the space industry did not have any years of negative growth over the last 20 years, even during the 08-09 subprime mortgage crisis and during COVID-19, the space industry continued to show positive growth throughout. This is effectively the holy grail of investment. It's an opportunity to hedge against market downside and black swan events, and an opportunity to diversify into an investment sector that seems to be bulletproof, at least from the data we have so far. I don't know of a single other investment sector that has both of those qualities. So I don't get really concerned about the macro environmental economic stuff because it doesn't seem to have any sort of serious impact on space as an investment sector. Now it will have impact on, inflation. Obviously, you need to start paying your people more so that they can afford eggs, right? So that sort of thing will have some effect on the individual business owners, but I don't think there's anything to be worried about for the sector overall.
Thank you. Rafael, do you agree? And if so, what are the opportunities presented in that environment?
Yep, partly. So where do I start? So you mentioned budget uncertainty. Welcome to the space sector. I mean, do you remember this time in the early 70s when the space shuttle only passed with the vice presidential tiebreaker vote and Apollo was basically canceled because we decided to fight an expensive war? I mean, that's just what it is. I mean, it's a in many ways high volatility sector, but I agree with Megan. It's high risk, high return. As I'm inclined to say, when we say like, you can't take the heat, get out of the kitchen, or you can't take the heat, get away from the launch pad. This, this is space, right? Like short term is like 10 years. Like you can invest hundreds of millions in some project and then it doesn't work or like blows up. But if it works, it can also be very, very significant investment. So I really like Mike's pitch. I think I'm going to steal it or get a video or something for our investors. But I truly believe that's what it is. It's a new continent. It's like building the railroads to the U.S. West in the mid-19th century. It's like opening up stuff that is going to be so significant that you cannot have a short-termish view. There's going to be volatility. Of course, there's going to be volatility. But the end opportunity, if you position yourself, it is literally going to be like, buying real estate in California in the 19th century or something like that.
Thank you, Rafael. I mean, Mike, you see it from, I think, both perspectives of a supplier and maybe an actor in the industry. How do you see these trends impacting the business? And again, do you see any specific opportunities presented?
Yeah, I agree with the statement that space continues to be stable for sure. I think it's stable for the couple of things that we've talked about. Like the commercialization aspect of it is really important. Like we have bad day back in the shuttle days, where you've got largely one nation with one government program that had a bad day. Some of the shuttle blew up, and it causes a whole risk posture and consternation around that. Today, Starship blows up and people are celebrating. It's a party. It's like, look, we tried. We blew up a rocket, and it's like because of commercialization, it's industry taking chances, and industry taking risks, and moving fast, and trying to get there faster, and doing bigger things, and large levels of stability comes from that commercialization. And so, when you're trying to hit a real market, like bring the internet to a third of the world that doesn't have it, there's a lot of motivation to get that done. If you blow up a few rockets on the way, who cares? We're taking the internet to a third of the world. If we can go and do industrial things in zero gravity that we can't do on Earth, people are going to go and do it. When you have 54 nations that have signed the Artemis Accords to collaborate on the moon, one country having a bad day, it's hard to slow down 54 nations working together, especially when 11 other nations have signed up with China to also go and live and work on the moon. One of those teams is not giving up the moon. Here, you take the moon. I'll just stop right now because we blew up a rocket. That's not going to happen. So the strength of the commercialization and the strength of geopolitical collaboration and geopolitical competition, I think, causes you to power through all of this right now, which is one of the main reasons why access to this new market, this new continent, is not going away, and therefore it doesn't get connected into all those other metrics that Megan was talking about. It just keeps moving.
Thank you. I mean, Dave, when we were talking about preparing for this panel, you had mentioned, your perspectives on international focus being important as well. And I mean, let's not forget commercial space. When we say commercial space, we're talking about late 1990s, 2000s, where there was meaningful movement towards commercial space. This is still a very young industry, but you're trying to attract people to come to this area to build space businesses. And you've mentioned a few times this sort of international effort, not just a domestic effort. How do you see that playing into the resilience and the long-term view of trying to continue the commercialization and in a way sort of regularize this industry like any other industry?
Yeah, I mean, I think that's the exciting part is that, make no mistake about it, there's a space race going on across the world. And, you hear about a country almost every other week now getting into this sector. And I think that's a great thing because this industry is very globally connected already. And so I think there's a lot of opportunities for partnerships. We have an international business attraction strategy, and we target specific countries, both in Asia and Europe. And the conversations we have with their space agencies, the partners over there, the funders, the companies, they're very much excited about partnering and collaborating across different countries. And so and we saw that, we see that with some of the mergers that have been announced this week as well. And so, we're very excited about countries like Japan, South Korea, India. We think there's great opportunities there. We're also, really talking to a lot of folks in France and Germany, Netherlands and the UK. And so there's a ton of collaboration in Australia as well. We had a company that's going to set up a really great opportunity here in this area. So it's just really fertile grounds. And I think that the fact that this industry really is already global, I think it really presents a lot of opportunities. And I would say, to the question of about, what is the opportunity now? It's, at a very tactical level, luck favors the proactive, and so if you're a company trying to figure out how inflation's going to impact you and the different things are going to impact you, you really do need to be proactive during this time and really determine what's my contingency plan or where can we find that opportunity. Even for us in government, looking at this area and the impacts of federal workers and contractors. We've already created the Loudoun Resiliency Initiatives that helps job seekers, does outreach to some of the largest contractors in the area. What we find during these times when there's lots of economic uncertainty in America is all of a sudden you start seeing the creation of companies spike up. We saw that during COVID. And that's actually a really good thing. And so we've actually proactively created more services so that these fledgling companies that even aren't just have ideas about how to create a space company, that we can try to figure out how to help them. And so that's how we're trying to be proactive, and I really think that's what companies and investors need to do.
Thank you, Dave. So tacking to a new topic, after years of relatively low-cost capital and stable economic environment, the space industry, like a few other industries, is going through a process of rationalization. It's mostly impacting early and growth stage companies, but it's also impacting some mature companies as well. And it's happening on all the various verticals, whether it's supply chain, whether it's communications, Earth observation, launch, orbital debris, and the like. How do you see that playing into both short-term and long-term investor perceptions on the space industry? How do you frame it? And again, do you see this as a challenge? Do you see it as an opportunity? Would love to get some perspectives. And let's start with you, Mike.
Yeah, I think certainly I see opportunities in that. We are definitely seeing, winners and losers. If we go back to 2020 and we went through a burst of enthusiasm, I went public right after that in 21. At that time, there was probably a good half dozen SPACs, special purpose acquisition vehicles, that were launched. Most of those didn't have a good day. A couple of them are doing okay, and a couple of really good sparks. So we're definitely seeing winners and losers. So there is a market there. There is an opportunity there, but earlier comments, it's complicated. It's not just an easy thing. You just don't kind of walk into this new place and say hello, and I just access a consumer. Finding your way into the right programs and path to revenue on space programs you got to know what you're doing, and you got to get the right connections to be able to do that. And so there have been winners and losers. In cases where people are having maybe a bit of hard time, maybe run out of cash, they still develop good technologies. There is consolidation opportunity. There are opportunities to be able to click some things together, I believe, and make some larger space companies. We're starting to see some evidence of that, and I think that will continue. So that as we go forward into the future, the future challenge that might come from that is that we'll end up with a number around the world of larger space companies. But that's great. That means that you can have early investment, you can have startup, you can have a new idea, you can grow up and get to a certain scale, and you'll be part of some consolidation into larger space companies over time. So I think that it just makes it stronger moving forward. And for those of us that are kind of in more positions to build larger, broader space companies, there's a great consolidation opportunity coming.
Thank you. So, Rafael, you sort of live this inherently in what you do. I'd love to get your perspective, but also maybe add on, do you see this concept of funding and creative destruction being more so a evergreen reality in space, or is it just more cyclical like other industries as well?
I think it's an evergreen reality in capitalism, and that's a great thing. I mean, that's how we do innovation. Like Mike says, there's going to be winners and losers. And to the extent, sometimes the losers were, just completely ridiculous companies that should probably have never gotten funded, but got funded in like the heydays. And sometimes there are, companies which have really interesting tech, and then they'll probably get picked up. I mean, look at Rocket Lab Mynaric this week, right? For me, that's a completely normal process, and we will take advantage of it. So I hope our portfolio companies, to the extent they can, will take advantage of it. And frankly, without giving too much away, there's a constant internal discussion at E2MC that, right now we are a VC fund, but again, I'm an ex-Wall Street guy. There might be stuff where we get involved in some situations like that.
Megan, your perspectives?
So I like to refer to this as the magic space sprinkles, right? You take any company, any normal company doing a normal thing, You add the word space, the company's name, and now the valuation has quadrupled. And that's the magic space sprinkles, right? So that's the thing I think that all companies in this field need to be, very wary of, is those ridiculously outsized valuations. Because then when there is an economic correction, as there always will be, or when an investor is smart enough to do the math about the investment side of this business, but subtracting SpaceX out of that math, and you get a very different picture, those valuations do not match up. And then these companies end up having to have a down round or can't fundraise in the future because they started out with these valuations that were just absolutely unfounded and astronomical. So if you can be realistic about your valuation, if you can let a sophisticated, experienced investor guide you on those valuations and not get really upset when an investor comes back to you with a much lower valuation, it's like somebody telling you that your baby's ugly, right? Like nobody likes to hear that. But there's usually good logic and reasoning behind those valuations being kind of normalized from the beginning, and then you avoid some of these situations later on. And I do think that the SPAC craze, to Mike's point, a lot of those companies who SPAC'd weren't necessarily good representatives of our industry. And those that have now been delisted or, at risk of being delisted, I think maybe gave retail investors, a bit of a bad taste about the space industry. I think that will change over time as we start to see more traditional IPOs, more companies like MDA that are doing well on the public markets. We've got a portfolio company, Voyager, that's prepping for their IPO right now. They've got a great diversified business. And so I think that you will see this kind of rationalize, as you put it, at the industry over time.
And, for those unindoctrinated, if you're looking at a SPAC, if it's pre-revenue, it has enough proof of concept, probably one to avoid. Dave, I don't know if you have any comments about maybe just, regional ancillary support resiliency in terms of managing through this evergreen cycle of creative destruction, refunding, and the like.
Yeah, and I think it goes back to my earlier point about making sure that you don't leave any stone unturned in terms of the resources in the area in which you're operating. Really, there's really a race to try to help space companies out there right now because of the excitement in this field, and so I think that there's a ton of opportunity there for really making sure you're connecting with the right people, just like you would, and thinking about what investor to partner with. That there's a lot of eager partners out there really willing to help.
So short answer before we open it up for audience questions. If you personally are going to invest in a new space economy application, what's it going to be? Very short answer, and I'm sorry somebody might take your choice, so go to number 2, and we're just going to go down the line, starting with Rafael.
In-space manufacturing, and you'll hear a few things from E2MC in the next few weeks about that.
Okay. Mike?
Communication side for me, just because it's explosive growth right now.
Okay. Dave?
Earth observation and cybersecurity, the nexus of that.
Megan?
Space stations, they touch all of the above.
Bravo. And I'll join in, direct-to-device. One true-false question. Just under a year ago, the World Economic Forum partnered up with McKinsey and did this very exhaustive study of what the future space economy may look like. If you haven't read it, I really encourage you to do it. You can go on the WF website and download it. But the premise was that in roughly 10 years, the space economy will grow to about $1.8 trillion, mostly fueled by growth from non-space actors today using applications that are generated by in-space businesses. Very simple question, again, down the line. Do you think 1.8 is just right, too low, too high? Rafael?
Too low, but they have no idea. Okay.
Mike?
I think too low because in the same 15-year period, all the literature in China would say that the Earth-to-Moon economic zone will be 10 trillion. And so when the other side of the world sees a 10x opportunity, that's good validation for our 1.8 trillion opportunity.
Okay. Dave?
I can't go against Mike. It's got to be too low.
Megan?
Definitely too low. And I think that 1.8 trillion is probably a good number for the terrestrial part of the economy, but as mentioned, once we're operating cislunar, that's a whole new world, literally.
Thank you. So we have time for a couple of questions. There's a microphone set up in the middle aisle. If you'd like to just stand or get in line, we'll handle a couple, please. And please identify yourself.
Does it work? Okay, it works.
Yep.
Thank you for this panel. You gave a lot of good arguments to use for pitching non-space investors, so I'm going to steal many of things you presented here, especially about continents and especially about growing markets, no matter of how the rest of the market works. I'm JJ from Aerospace. I think it's a complex question, especially right now. So typically, as VC managers, you're probably pitching your LPs how the fund is going to do long term. And startups, as we see golden rule that in 7 years we should go from scratch to probably 1 billion valuation. With AI, we see it's 3 years, so it puts some pressure. But historically we see it's rather not 7 years, but maybe 15. How do you deal with the same problem when you are pitching LPs? And what do you think about this, I would say, expectations about the growth?
So we did some research early on when we were just setting up Space Fund and found that at that time, the average age at exit was 7 years for space companies. Now, obviously, you look at SpaceX and Blue Origin, they're both over 20 years old. SpaceX was more than 20 years old when it had its first quarter of profitability. So not every space company is going to fit within that 7 to 10 year VC investment window. And a lot of times we do have to turn companies down for that reason. We say, come back in 3 years or 4 years when we can get you into that investment time frame that we're kind of required to do by our LPs. And so oftentimes there's other sources of capital for those early stages, whether it's angel investors, government, et cetera, to help companies get to a point where they can raise and that they're realistically within that 7 year time frame.
Okay, thanks.
Thank you. We can take one more question.
I was wondering, what will it take or will it happen that the space economy will be self-sustainable without government as a customer or as a kind of funder?
I don't know that I want that to occur, honestly. It's my supposition that one of the reasons the space industry has this kind of economic resiliency is that backbone of the government as a customer. Now, early stage companies, we always suggest that you focus on non-dilutive government funding to help get you through that R&D stage. And then once you actually have a product, you want to switch from 60 or 70% government as a customer to 60, 70% commercial as a customer, which I think is right about the same numbers that you were quoting for the space economy overall. And that government customer gives you a baseline that is solid and reliable, even as you get a diversified commercial customer set as well.
So I agree with Megan there, and we haven't even talked about stuff like the Golden Dome today and how much money that could funnel into the space sector. But I do believe we have to bring. It is my true belief that almost any sector on Earth can benefit from space, and that's including really huge sectors like the pharma sector, for example. We just have to. The problem is most of the sectors don't know that yet. We have to do a much better job at education, but the potential is so huge.
I think you always have both, and then at some points, it's interesting to watch who's leading. So in space, government work would lead the tech. Now, for example, in my case with digital satellite, digital communication satellites, so fully software reconfigurable satellites, the commercial industry is going to be digital. It is digital now. It's going to be 2 to 4 years ahead of militaries, even the U.S. military, in terms of LEO digital communications. And so you want them both, but it's interesting to see with speed how they can take turns on who's actually driving the roadmap.
And I don't think I can think of a single infrastructure or technology-based industry that doesn't have a measure of ongoing government support, either as a customer, either as ancillary support or indirect support.
Communications, transportation, all those things.
Always there.
You know what I would add too to that, I think I mean, to your question, I mean, I think you're really getting at is, when is the commercial aspect of it really going to, kind of see its self-definition? And I think those things take a lot longer than people realize. But I think it will happen. I think the other dynamic that, in terms of looking at, this overall space economy is it's not just the commercialization of space or the internationalization of space with country involvement, but it's also the militarization of space is also happening as well. I mean, as we all saw with the beginning of the Ukraine-Russia war there, I mean, there was quite a bit of offensive capabilities there, and I can guarantee you every country that's paying attention to this is also trying to work to do the same thing. And so I think what's really, if you want to paint the picture about what we're seeing is you're going to see commercialization, more sustainability. You're still going to see government involvement in different non-military ways, and you're going to see the military involvement. So it's going to be a very dynamic field looking ahead.
Thank you, Dave. Well, please join me in thanking Rafael, Mike, Dave, and Megan, and as well, since we are the last panel, congratulate the team at Access for once again executing on an impeccable show, and we hope to see you again next year. Thank you, ladies and gentlemen.
Thank you.